we could probably keep a bunch of economists and modelers working all day long to calculate the supply, demand, and price elasticity of this. I don't think we've ever seen, a 2 to 10x increase in demand combined with a halving and supply in a scarce, desirable asset that people want to hold for a long period of time. So I think we're expecting 2024 is going to be a major bull run for the asset class. We just don't know how far the asset's going to run at this point.
As customary, Bitcoin's price took center stage in 2023, and the news was positive. Once again, Bitcoin emerged as the best-performing asset class, surpassing stocks, bonds, and gold by a significant margin. Presently, the price has surged over 150% since the year's commencement. Michael Saylor, the executive chair and co-founder of MicroStrategy Inc., underscored the transformative impact of spot Bitcoin ETFs in a recent Bloomberg interview. He likened this development to the most significant occurrence on Wall Street in 3 decades, drawing a parallel to the creation of the S&P index. Saylor predicts a substantial bull run for Bitcoin in 2024, driven by heightened demand following the approval of spot ETFs and a supply shock resulting from the halving of Bitcoin production by miners. This convergence of factors, he believes, will propel Bitcoin to new heights. Saylor further delves into MicroStrategy's strategy as a major Bitcoin holder, outlining plans to capitalize on these developments. He discusses the company's approach to continue acquiring Bitcoin, leveraging its operations and capital markets to enhance shareholder value. Additionally, Saylor touches on the new accounting rules by the Financial Accounting Standards Board, enabling companies like MicroStrategy to fully reflect the volatility of their cryptocurrency holdings. This shift has the potential to transform their balance sheets into significant assets. As we explore these groundbreaking insights, it's essential to consider their implications for Bitcoin's future and investors like you.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Well, I think you can't really underestimate the significance of the spot ETFs. It's not unreasonable to suggest that this may be the biggest development on Wall Street in 30 years. I mean, the last thing that was this consequential was the creation of the S&P index and the ability to invest in all 500 S&P companies via one trade at the same time. So this is very eagerly anticipated, but most of the money in the Bitcoin market right now is the hodlers and the traditional crypto investors. Mainstream investors, mainstream retail, mainstream institutions have not had a high bandwidth compliant channel to invest in this asset class until these spot ETFs. So I think in January, the approval of the spot ETFs is going to be a major catalyst. It's going to definitely drive a demand shock. And then that will be followed in April with a supply shock because there are about 900 Bitcoin a day available for sale by natural sellers, the miners. And that number is going to be cut to 450 Bitcoin a day in April. So it's a pretty big deal. The ETFs are unlevered and they charge a fee. MicroStrategy is an operating company. So we're fairly unique because we can generate additional Bitcoin via our operations, either via P&L operations or capital markets operations. And we can take advantage of intelligent leverage. Like we can borrow money at 0% interest for many, many years. And we did that with the convert. And then we can use it to buy Bitcoin. So you can really think of the ETFs as like shipping lines, very efficient, long haul, carry a lot of capital. MicroStrategy is more like an airline. We don't have the cargo capacity in our capital structure that a container ship has, but we can go faster and we have higher performance. So we provide you leverage and we don't charge a fee. And so if you can dig into our capital structure, you get comfortable with that. We offer sort of a high performance vehicle for people that are Bitcoin long investors. Well, we will absolutely continue to acquire Bitcoin. Our strategy is to acquire and hold the Bitcoin, and we will acquire it by a variety of different means as long as they're accretive to our shareholders. So our goal is always to find a way to pursue more Bitcoin per share for our shareholders. And sometimes we do it with debt, sometimes we'll do it with equity, sometimes we'll do it with cash flows from the business. And of course, the volatility in the market just creates more opportunities for us as an operating company. And our particular business strategy allows us to harvest that volatility to the benefit of our shareholders. I think fair value accounting is a giant step forward for the industry. And up until now, corporations have had to invest all of their spare treasury reserves in sovereign debt. Sovereign debt normally has a compound annual growth rate of a few percent. The cost of capital for most companies is 10 to 12%. Bitcoin's got a compound annual growth rate of 40+% over the past 4 years, and even higher in the more distant past. So having a digital money like Bitcoin as a treasury reserve asset allows you to beat the cost of capital, and it turns your balance sheet into an asset instead of a liability. So we think this is a real game changer for corporations. The fair value accounting guidelines from FASB are just going to be good for the industry in general. They'll provide more transparency, and they'll be good for Bitcoin as an asset class and for Bitcoin as a treasury reserve asset for companies that have large cash flows that they want to carry forward.
Investment management giant BlackRock has submitted an amended S-1 filing to the Securities and Exchange Commission for its proposed spot Bitcoin exchange-traded fund. Responding to regulatory pressures, the updated filing reveals BlackRock's concession to exclude in-kind creations and redemptions initially, in line with the SEC's advice to favor cash creations. The asset manager, however, aims to eventually reintroduce in-kind creations pending regulatory approval. Last month, the SEC urged companies pursuing Bitcoin ETFs to opt for cash creations, leading several other firms, including Valkyrie, Invesco, and Galaxy Digital, to update their SEC filings accordingly. In 2023, institutional interest in Bitcoin surged significantly, with BlackRock's ETF application in June marking a notable milestone among the 12 open applications from various firms. Despite the SEC rejecting GBTC's application, a court ruling deemed the SEC's reasoning invalid, hinting at a positive sentiment for Bitcoin. The mining hash rate, a measure of Bitcoin's network security, saw remarkable growth, doubling year-to-date from 240 exah to 482 exah. Bitcoin's continued reliability was evidenced by its 100% network uptime for the 14th consecutive year. Additionally, the year 2023 witnessed broader acknowledgement of Bitcoin's positive impact on energy and the environment, stabilizing electrical grids and fostering economic incentives to reduce carbon emissions. Looking ahead to 2024, a significant event is the upcoming halving in late April, where the new issuance of Bitcoin will be halved at block 840,000. While demand for Bitcoin is growing, the supply per block will be reduced by 50%, historically signaling a potential bull market. The likelihood of a bull market in 2024 and 2025 is high, although opinions on this prospect are welcome in the comments section. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.